Here in this video, we will be going over my new price target for Tesla stock by the end of this year. I could be right, I could be wrong. I'm going to go over why I'm setting this price target, why I'm changing this price target. It's actually going up just a little bit marginally, and I don't think people are going to like this, okay? The last couple of videos, people have really, the last couple of weeks of videos, people have been very, very negative in Tesla. They think the world is ending for Tesla. And that's what Wall Street or short sellers or maybe market makers and financial media would want you to believe. Let's be honest. But you're actually seeing a change right now happening in Tesla. And it's a very early change that will be appreciated by the markets in the next couple of months. And that's really the core reason for changing the price target. Now, I will say there's a caveat, because here in the next couple of weeks, we have some problems in our markets. Now, this guy, his name is Tom Lee. He is, or has become, one of the most widely known and widely respected fund managers on Wall Street. He is the top fund manager for Fundstrat. Now, he says if the Fed doesn't cut in the spring, it will pressure stocks. He thinks there will be a bit of a sell-off in the first half of 2024, kind of a dip, and then markets will rally higher by the end of the year. Now, when this guy says something, don't just believe it on face value, of course, but it's a strong opinion with a proven track record that you probably want to at least acknowledge. So I'll start with this clip. It's about 4.5 minutes long. I just think you guys need to hear it. And then I'll explain exactly why stocks are about to sell off, why March 12th will indeed be the day to mark your calendars for, let alone just next week. You'll get PCE, you'll get durable goods orders, you'll get ISM service data, tons of other things coming next week and the week after that, but specifically March 12th.
Sentiment is pretty stretched. Everybody's long. You really think there are that many people who are still non-believers in this? Now, I know there are some out there because I hear from them, but you really think there are that many?
Yes. I think there's a couple of reasons. One is many people think the stock market's very concentrated and the FANGs or the Mag 7 are expensive, but NVIDIA's free cash flow yield is 3%. It's the same as the S&P. It's actually not expensive. And I think there's still this inflation mindset that inflation is stalling or could come back. And so investors are kind of inclined to short the market. And I think the best evidence that sentiment's still pretty negative is I hear people talk about the market being expensive, but outside of the FANGs, it's trading at 15 times forward. That's never been an expensive multiple. It's just people look at the price appreciation of the market and because they may not have participation, think it's a bubble.
You don't have any concerns at all that it might be, especially, stocks like NVIDIA, which, as we say, seemingly, went from 1 trillion to 2 trillion in market cap, quote unquote, overnight?
In some ways, I think, stocks rise rapidly when either estimates change or they want to reprice the future growth. What's interesting is NVIDIA's free cash flow was $7 billion a year ago. It's now close to a $50 billion run rate. So it's gone up by, 7 times, and the stock price hasn't risen by that much. I don't think we will have a bubble until the consensus declares there's no bubble and there's no risk. And then that's when we're likely in a bubble. But I think a lot of folks raising the prospects that this is a bubble means it's still early.
The market seems to be giving the Fed the benefit of the doubt that though it might not cut as early as it once thought, it's going to cut at some point this year. There has to be the expectation in this bull run that cuts are coming sometime this year, I would imagine. What happens if they don't?
If the Fed doesn't cut, I think it would pose quite a lot of risk for the stock market. I don't think the Fed's going to hesitate just because the stock market's risen or the ISMs have turned up. The Fed's policy rate of close to 5.5% is the highest policy rate in the world for any developed country. Look at the U.S. 10-year; it's at almost 4.5%. Germany's 10-year yield is 2.6%. I think that the bond market itself is telling us that the Fed is overly restrictive right now.
Do you think they should cut in March?
I think the probability of cutting in March is higher than what's being priced in. And a lot of it will depend on what February CPI looks like, which comes out March 12th. But, you know, we think there are some anomalies in the January CPI, including poor seasonal adjustment and the fact that auto insurance is actually accounting for almost more than half of the rise in the supercore services number. And if those start to show improvements, I think whatever sort of hot CPI we saw in January and the repricing reverses to a large extent.
What happens if it's not March, and what happens if it's not May?
You know, if it's not March and May and it's not even looking like 2024, I do think it puts pressure on stocks. But if it's a Fed that isn't satisfied with 6 out of 7 good inflation reports, and they suddenly move this, the guidepost has to be 9 out of 10, I think the stock market gets impatient and just rallies anyways. But it just really depends on the path of inflation.
The other, issue, I suppose, as some are talking about, is this whole loosening of financial conditions because of this AI boom in the stock market. Do you think that's an influencer on the Fed? And on one hand, we're all revved up as bulls because we look at NVIDIA going up every day and we're like, wow, this is incredible. Look at these new records. But there's a price to pay potentially for that. And that is perhaps putting off these rate cuts further than we're able to tolerate. The AI boom is creating wealth, right? People who own the stock. But as you know, that isn't been translating into necessarily consumer spending incrementally, especially for the average American. And if the AI boom is actually replacing the labor market, because that's really what is being targeted, right? Turning a service job into a piece of silicon, which 98% goes to NVIDIA, that's actually deflationary, and it's actually deflationary to the labor market. So I think the Fed doesn't necessarily have to be worried if AI stocks are actually booming.
Now, I wanted to play that clip from Tom Lee because I guess right now where we're at, the longer term trend looks very bullish for stocks. Historically, the 4th year of a president's term is bullish. A presidential election year is bullish. When you are up double digits the year before, the next year tends to be at least a single digit positive return, which you've in reality already seen that for the S&P 500 to start 2024. But Tom Lee is also not that bullish on your big tech names. He likes the other parts of the markets that are cheap. And if we are to get a broadening out of our markets, that's where the money will be made. He's not saying to go rush out and buy NVIDIA, to buy Meta, to buy Microsoft. He's saying if you want to, you can, because they're not super expensive in relation to, your other big tech names. But in relation to small caps, interest rate sensitive companies, those are expensive. So Tom Lee has been saying he likes small caps the most for a while. Tesla is grouped in that category, in my personal opinion, because the theory around small caps is really when the Fed starts to lower rates, small caps, interest rate sensitive stocks will outperform. Tesla is the definition of an interest rate sensitive company, and Tesla has been trading more alongside the small caps than the S&P or the NASDAQ in recent years. Now, Tom Lee also does expect a correction in the first half of 2024. Whether that is due to the Fed, whether that is due to something else, we don't know that yet. But as I said in the last video, you want to mark your calendars for March 12th. March 12th is the day you get CPI, as Tom Lee said in that clip, but it's also the day of the lockup period expiring for SoftBank. Now, SoftBank owns 90% of ARM. Their investment in ARM is worth more than the entire company value of SoftBank. SoftBank has seen over a 300% return on their ARM acquisition that they bought back in 2016. Now, on the last video that I put out saying specifically mark your calendars for March 12th, this individual says even Tom Lee is calling for a correction. If the biggest bull in the market says a correction is coming, one should take pause. And I do think that is true. But there's a specific comment that I want to share with you. It's this one. He says, "Who told you SoftBank will sell ARM? Wishful thinking. You are, I am apparently delusional." I say they will 100% sell ARM. Zero question about it. Their ARM investment is worth more than the whole company of SoftBank. It would be financially irresponsible to not sell any. Question is really, do they sell 10% or 40 or more percent? That's the question. Do they sell out a majority of their stake? Do they just sell out a little bit? Why I point this out is not because ARM is fundamentally important for the markets as far as market cap value and on a nominal basis, but the semiconductors are. So if ARM were to see selling on March 12th or thereafter, that's going to put pressure on NVIDIA. That's going to put pressure on SMCI, all of your other GPU AI related names. And that coincidentally comes on the same day we get the next CPI report. And if the CPI report was also hotter than expected for February, that's going to put a lot of pressure on our markets, specifically on March 12th. So March 12th could be a big quote unquote make it or break it moment for our markets here in the short term. Now, I will say the markets like to price in the volatility that we could see ahead of time. So it wouldn't surprise me if stocks actually sell off into March 12th. And then you may actually start to see a bounce from there. On Friday, we did get a lot of resistance around 510. You hit 510 in the beginning of the trading day, and you bounced, rejected, I should say, right off of that level. And then what happened? You sold off to an intraday low of the day, and then you even sold off the last 2 or 3 minutes of the trading day today, almost to a new low of the day. So it's clear you're butting up to resistance. You got big catalyst even coming next week with PCE, and that's expected to be very, very hot. If next week is rough, that could start a correction-like event in our markets. I will also point out what the dollar has been doing. I've talked about this before many, many times, but when the dollar falls, stocks tend to do very well, right? This is on a weekly chart looking at the dollar. This was the Rona, the pandemic, if you will. Look at the dollar, it fell. What happened? Stocks rallied until the dollar started to rally. And then the dollar rallied all throughout 2022 until about October and November. What happened? The dollar started to fall. What happened? Stocks bottomed in October of 2022. The dollar was falling. They rallied all the way until July of 2023. What happened? July of 2023, the dollar bottomed, started to rise, and you went through a 10.5% correction. What happened back in October, November of 2023? Well, stocks fell again. This was another, like I said, 10% correction. And then the dollar started to fall, and it's been a rally, or was a broad-based rally until really the end of December. Then what happened? The dollar has been rising in 2024. The markets have not been falling. Normally, you should be seeing the markets actually maybe 5% or so lower, just judging on this rally in the dollar and the 10.5% correction that we've seen. And this rally so far, the S&P should probably be down about 5% right now. So you could see a pretty dramatic kind of catch up, if you will, drop in the markets if we start to get things working against us. So I want to make it very clear. I am bullish as hell in the long term. And even after a correction like, event or period in our markets. But in the near term, there are a lot of risks that raise the odds of a correction. I will also point out the repricing we have seen in Fed policy, going from 7 rate cuts priced in now to 3 rate cuts priced in for 2024. That has not budged the headline S&P or the NASDAQ in a while. And I think there is a little bit of skepticism there, and people don't want to believe that we're not going to get, 5 rate cuts or more. Some people still hold that narrative. The next CPI report, March 12th, will be very important. And again, the GPU AI situation in our markets is basically the glue that is holding big tech together. $1 trillion of value likely added to Microsoft just based on AI alone. And if you start to get some selling in ARM, that sympathy move, remember that sympathy move will affect NVIDIA. It will affect SMCI and all of these other names. And it's not a question of if SoftBank is going to sell some of their ARM stake. It's the question really of how much are they going to sell? Do they want to liquidate most of their position? Maybe. They were trying to sell their entire ARM stake to NVIDIA for a lot less. So I'm sure they're going to sell a decent amount, maybe 20, 30%. And that will have big effects on our markets. But hey, after all, I could be wrong. And well, don't trade or invest based on what I think or what I say. Now to the juicy part in relation to Tesla. I am upping my price target. Tesla's historical average PE for Tesla stock over the past 4 years is 268 times. Now, the current PE ratio of 41.74 is 84% lower than the historical average. So buying Tesla now is, if you will, dirt cheap compared to what Tesla has been valued at in the past. A lot of that has to do with margins, and people don't know where margins are going to be. A lot of that has to do with perceived demand problems. Now, where I'm very bullish is I think there's a lot of things that are underlooked or overlooked, like the refreshed Model 3. It looks like there's a lot of demand, at least here in the US, for this refreshed Model 3. A Model Y refresh coming later in the year. A potential faster ramp to the Cybertruck, in which, if you've seen the last video, the chief engineer for the Cybertruck says it's going to look like an Armada in the outbound Giga Texas lot here pretty soon with Cybertrucks, implying potentially a faster than expected Cybertruck ramp, which, if the ramp is faster than expected, that's going to lead to more profitability, because the more vehicles you can crank out with the same operating cost leads to more revenue, which leads to more profits. Pretty simple. The faster the ramp, the faster the profits. I think that's pretty easy to understand. But I also think Tesla is by far the best AI stock out there. Beyond the hardware AI play with NVIDIA and your other GPU semiconductor providers, real world use case for AI, Tesla is by far the best out there. And there is no value being assigned to Tesla today. And you can see this in the current PE multiple. Now, I've explained this before a couple times, and I'll say it again briefly. When Fed funds rates start to go lower towards the end of this year, that's when the markets will start again paying more for future growth. That's when you likely see the multiple actually expand. Now, Tesla did $3.67 of EPS in 2024. I think that's going to be higher this year. I do think that's going to be higher this year. I think Tesla can come in at about $4.15 of EPS for 2024. And I also should point out that Tesla is also looking to lay off a portion of their staff. I don't know what it's going to be. I don't know if it's going to be 2% or 3% or 5% or 10%. I'm sure it's probably 3 to 5% of their staff, maybe 5% of their staff. And that might hit in the near term with some kind of severance cost that will be accumulated to that. But in the back half of the year, profitability should start to show based on that. So really, I think $4.15 per share is quite conservative. Now, just when Tesla lays off their staff and starts to show the markets they're going to focus on being more profitable, the PE multiple will likely expand. Now, again, expectations are so low. Some people think the EPS is going to be lower than last year. I just find that hard to believe. Hard to believe, especially given Tesla's changing kind of their overall, I guess, way of doing business. They're not going to focus on unit growth as much anymore, is what it seems like to me. And they're going to take a stronger approach to profitability. And Tesla will be rewarded for that in the second half of the year. Now, if Tesla's historical average PE 268 times, I think it's no stretch to get to 90. That would be a double from here in the PE multiple. That would put Tesla's stock at about $373.50 per share. So 370 looks like a pretty comfortable price target for me by the end of this year. And I think you're going to see an aggressive rally towards the end of this year. I think Tesla could add $100 to $200 per share in the last 3 months of 2024. I think it could be ferociously aggressive, especially if the markets start to realize Tesla has this AI potential. Who knows if Tesla starts to actually hype up their FSD or Optimus? But it's getting to the point it's kind of hard to deny. I mean, if you see in the last video, Optimus is literally almost walking like a human. That's kind of insane. But I do think Tesla could hit as high as 100 times multiple. And by this time, you're going to have rates going lower. You're going to have more AI enthusiasm around Tesla, in my personal opinion. You're going to have Tesla focusing more on profitability. All of these three things boast very well for Tesla's stock price. And by then, hopefully you have a new comp package for Elon. There could be many other developments along the way, but these are things I am confident will happen by the end of this year. Really, by mid-year, start to actually have a large effect on Tesla by then. And at 100 times PE, that's still half of the last 4-year historical average for Tesla. And let's also be honest. When capital starts to come back into our markets, there is $6.2 trillion of money sitting in money market funds right now, 3 times the entire market cap value of the Russell 2000. When that starts to come back into Tesla and other, interest rate sensitive names, the play will be interest rate sensitive companies. Okay, let's be honest. People are going to tell you, buy interest rate sensitive names. They're the ones that are benefiting from the Fed. Markets love to position in tailwinds, right? A tailwind is like something pushing you forward. And that is the Fed lowering rates. That pushes up valuations and future earnings for unprofitable, high growth, small cap companies. Tesla, it doesn't necessarily fit that bill perfectly, but Tesla is the definition of the most interest rate sensitive company out there. So I think Tesla could, on the higher end side, hit 100 times multiple. That would put Tesla stock at about $215, pretty much a new all-time high by the end of this year. But I'm not expecting this to happen anytime soon over the next couple of months. I think Tesla could fall as low as maybe even 150 if we do go through an actual correction, if Tesla does get beaten down again. That's possible. That's totally not impossible, right? That's totally possible. But I do think you could really see some rapid gains towards the end of 2024. Really, second half of 2024. You could see Tesla go from, in the 200s to the 300s, and then the end of the year really see the high 300s, 400s, in my personal opinion. And at that point, if Tesla's more profitable, bringing in better, EPS than expected, valuation's going to fall even more. And, maybe Tesla comes in with a higher EPS than even $4.15 per share. And I mean, just look at this market. AI is highly rewarded. And I think Tesla's AI, the TAM there, literally every person in the world could use Tesla's AI, whether it's FSD or Optimus. I mean, the sky's the limit. And I think that has to, quantify a higher multiple than where we are now. But the markets are not going to realize this until it does ultimately start, right? One day people are going to wake up and say, wow, Tesla's this great AI opportunity. And we're going to sit here and say we've known this the whole time. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day. If you guys want to come trade with us, check out that link down below in the description of this video, as well as go ahead and follow the Michael Tyler X account over there and stay informed with what big money is doing and saying, and different charts and different Tesla news, all kinds of fun things over there. At least I think they're fun. Check it out. If you guys have not, it's free $99. Thank you for watching. Enjoy the rest of your day and your weekends, and I will see you in the next one.